Hi, this is Drew Tignanelli. This is our May update of the Financial Pulse. And there are a lot of good things going on. The conundrum continues. You see some positive things.
Sure.
And you see plenty of negative things out there.
And then we see weird things, too. I know you're a big fan of Twitter. So just recently, yeah, you're a big fan of Twitter, right? You do a lot of tweeting?
I've never looked at Twitter.
You know, it's more interesting than you would think.
I understand it, but I don't need somebody to tell me they're going out to buy soup
That's
or whatever.
That's not what people, well, some people say that. Anyway, here's the point. Somebody hacks the AP's Twitter account.
Associated Press.
Correct. And they tweet out, there have been 2 explosions at the White House, Obama hurt, the market goes bonkers for a few minutes. What does this tell us about the way markets function today?
Tells us, number one, that markets are inefficient.
Okay.
That people will make sudden reactions just based on some simple news without even knowing the validity of it. But number two, it just shows how technology is such a big force in it. And what an investor needs to do is learn how to take advantage of these types of situations when they arise.
So talk a little bit about the technology element of it. What role is technology playing in trading today that it might not have been playing a decade or more ago?
Well, technology, you know, there are plenty of companies who have these computerized robotic trading,
sure,
and they have algorithms. And so the algorithm says if you get a certain piece of news of some sort,
right,
you immediately make a move. And then also there's other computers that when they see the market's momentum turn
right
in a certain amount, the computer goes in and immediately starts buying. And only after it's started to buy or sell does it then have some form of human intervention that starts to think about why is the computer, what's it reacting to, that the trader would then say, okay, stop, let's get back out of this,
right,
or hey, let it keep going, the momentum's in our direction, or hey, this news is building, you know, et cetera, et cetera.
And this was what happened with the flash crash last year?
You know, that's a little different, I think. From what I understand with the flash crash is and again, it's similar because it's computer trading,
right,
but you know, somebody puts in a wrong order, and then all of a sudden certain other computers see this happening. You know, this is not new though. You know, the crash in 1987, a lot of it had to do with program trading.
Sure.
So what it was is they had programs in force that said, if the market goes down by this much, sell this much of the portfolio. Right. And if the market goes down by this much, sell this. And there were so many of these program traders in there that believed this was a way to protect the portfolios. What happened is it built upon itself, and it just
compounding.
It started compounding, and it crashed the market in a big way. Now, there were many other factors. In other words, just because something simple like that happens and the market goes down, you should never consider it solely that drove it down.
Okay.
In other words, solely the tweet going out was probably not the sole reason that the market dropped. In other words, there's probably other things going on. Like, for example, in the crash '87, you had a market that had really gotten out of hand. Right. And right now, you have a lot of nervousness in the market. And, you know, so you know, there's more factors involved than just anybody who says, oh, you know, this one tweet caused the market to decline is missing the bigger net that encompasses the market as a whole.
It's like the straw that broke the camel's back in that case.
It's just, yeah, it was something, it was, like you say, straw that triggered the nervousness that's already in the market, and these programs are set up to do these types of things.
And a lot of that nervousness is being caused by stuff that's going on around the world, and I'm sure we almost get sick of reading it, sick of hearing about it, but there's some really serious stuff going on right now in Syria that could have an impact on portfolios. What is that? Well,
Syria, you know, you've got President Obama made a very bold statement that if they use chemical weapons, it's a game changer. What does that exactly mean? I don't know how to interpret a lot of the things that he says. So anyway, but, you know, what's that going to mean? You know, if he doesn't come forth in a strong way, he's going to be perceived weak. If he comes forth in too strong a way, he's going to trigger probably something worse than he wants to trigger. So, you know, it's going to have to be very well thought out, and obviously he's going to get involved in Syria to some degree now. And if he does, you don't know what Jordan or Lebanon or Iran or Iraq will do with that. And
what are some of the things?
And then you got Israel sitting there.
Yeah, right.
And they're not. But anyway.
Potentially even a bigger issue if Israel and Iran end up at war.
Yeah, well, it's number one. It's the cost of the U.S. because we're trying to keep our budget deficit down. This will just escalate it.
Sure.
You also got a major oil region there. You know, Saudi Arabia also. How's Saudi Arabia going to react if the U.S. gets involved in Syria?
Sure.
Kuwait, UAE, etc. Anyway, you've got. You still have Cyprus as an issue. Slovenia is the next to come up. Slovenia is going under. There's no doubt. And France, I still say France is the wild card. Their economy is in shambles. It's just not showing up in as bad as it probably is.
Well, and there are other headlines that are beating it out. So what are some of the things we're doing in portfolios to hedge against the potential for these downsides?
Well, in the portfolios, we always use managers that we feel are risk opportunity investors. They're always looking for a risk management position so that if the market takes a downturn, their history has been that they try to minimize that. Now, you can't guarantee that it's going to happen in the future.
Sure.
Because the future is the future.
Yeah.
Isn't that?
That was deep.
Deep. That's incredibly deep.
Did you get that, guys? The future is the future. Drew Tignanelli said it here.
And but you can't guarantee it. But they have a history. Every one of our managers has a history of protecting on the downside. So anyway, you know, we're staying cautious. We believe that there's still one big shebang left in this market, and shebang means down.
I was going to ask for clarification on that. Shebang's bad.
Shebang is bad.
Yeah.
Boom is good. Shebangs aren't. You know.
Well, let's talk about something happier for a second. We had a great radio show this past week with Bruce Feiler, The Secret of Happy Families, and we're going to have a podcast coming available soon, right?
Yeah, it'll be out soon. Hopefully when we produce this, send this video out, it'll go as a link on the video. And
can we confirm that, Ben?
The Secret of Happy Families is about the concept that you don't need to have a dysfunctional family. You don't need to have chaos in the family. You don't need to have little or no communication. There are plenty of things you can do to open up and make the family operate like a good organization, like a good business entity. And the reason why we do these types of interviews is because our mission statement is not just a, you know, something that we put on the wall so that somebody comes in, they might feel good about us,
right,
you know?
Right.
We drive everything we do is based on our mission statement, which is to help lessen the worry and burden of money management so that you can focus on something more important in life, relationships.
Right.
And when you're operating out of chaos and you're not operating efficiently, you minimize the ability to have relationships.
Absolutely.
And he talks about this, how this one family found every morning that they would just be in chaos, everybody trying to go this way and that way, etc. And mothers and fathers are screaming at the kids to do this, did you do this? And you know, and so they brought order to it, and when they brought order to it, and now the kids knew exactly what they could see it on the wall every time, and they just point them back, go back and see what's there, and you know, next thing they know, there was order, and the mother and father spent more time in the morning with the children, interacting with them, talking about important things, what's going on in school, how are your friends doing, what about that situation that happened over here, and you know, et cetera, et cetera. And there was much more meaningful conversation taking place. There's many great concepts that he lays out in the book, and in the interview we addressed a few of them, but even the book's better, I think. And
the book's better than our interview?
Of course. Because he gets the fullness of everything that he talks about. But I thought our interview was spectacular.
It was good.
Yes, it was. Anyway, so you can get that. And last topic we wanted to just address real quick is 401k plans. There's a, you know, July 1, 2012, the Department of Labor came out and said all 401k plans need to be transparent on fees. They need to keep fees down and explain to the employees what the fees are if you're participating in the fund. Most businesses who are big have already done this.
Okay.
But most small businesses of 50 or less people, I'd say have no clue that they are, if they have a 401k plan,
right,
they better make sure that it is very well thought out.
Sure.
And that's why our company, about 3 or 4 years ago, began to make a push in this area, because we felt that 401ks were poorly designed, a lot of money being taken from the plans to pay all kinds of commissions and administrative fees.
Without people knowing it.
Without people knowing it. And the investment choices were very moderate to mediocre. And our concept was that there should be a much better thought out investment strategy. The cost should be brought down as much as possible, and the employees need to know. And now it's by law they are required to know. Should be very transparent. And this is going to be a major issue, and it's one reason why we are not very excited about the 401k options that most of our clients bring us into. They ask us to give them, and we look at them and just shake our heads as to, what are you supposed to do with this?
Making the best of a bad situation.
American Funds or Principal Financial Group, I mean, there's not much you can do with that. And you have to understand also that, like, if you have American Funds, Principal Financial,
right,
what are some of the others?
Mass Mutual's big and formal.
Yeah. But most people don't realize that there's like 4 levels of commissions that an agent could put in there, depending on the knowledge of the people they're selling it to, and so forth.
What can they get away with?
Yeah, what can they get away with, and how much does the employer want out of the plan? And you have to understand, when you see those funds in there like R1, R2, R3, R4. Or something like that.
Scale.
Each one has a different commission scale, and you could have the worst commission scale. And it's time the employees are able to rise up now with this Department of Labor ruling and say, wait a minute, this plan is not to my best interest, and you have a fiduciary obligation, meaning in my best interest, to create a plan for us.
Wait, are you telling me that the government did something right here?
I think they're making it open. They didn't mandate what had to be done. They just said you have to open up, and now it gives the plaintiffs' attorneys,
make it transparent and everybody can see it.
Plaintiffs' attorneys have more ability to work with this. Anyway, we're still cautious, but it's a conundrum. The market's going up right now. Commodities got crushed. That's a whole nother story. Maybe we'll see what's happening in June. Talk more about that. Anyway, we're too much time right now. This is Drew Tignanelli saying God bless.